I think it's obviously a bubble.
We are absolutely in an AI bubble now. It is going to burst. I don't know when. I don't know the order of magnitude. A lot of people are going to lose money.
If the bubble bursts, and this is a bubble, I don't even want to debate it. This is a classic, it's the sixth bubble. The AI, not the concept, not the technology, but the investor behavior is definitely a bubble.
Everyone keeps asking the same question. Is AI just another dot-com bubble? Are we days away from a massive crash? It's easy to think that. It rhymes with 1999, but if you look under the hood, the engine is completely different. We've seen this story before, just like the Industrial Revolution defined the 19th century, and the internet reshaped the 2000s. AI is simply the next evolution. AI isn't just a hype cycle. It's a regime shift, a raw productivity shock that leads to deflationary growth. And for those who choose to act, it may create a chance to build generational wealth. But here is the trap. The technology will win, but not every stock will survive. Today, I'll show you why this market is healthier than the skeptics think, why the next Fed chair may be your portfolio's best friend, and most importantly, how to spot the difference between the next Nvidia and the next pet scum. Let's talk macro. Right now, markets are pricing a tug of war between a massive AI investment cycle and sticky inflation. Enter Kevin Warsh. He's a top contender to lead the Fed, and unlike traditional central bankers, he understands one thing perfectly: the supply side. Mainstream economists are skeptical. They don't believe AI will lower inflation quickly enough to justify rate cuts. They see a tech boom and scream overheating. This creates a divergence, a debate. And in financial markets, divergence is where you make money. Legends like Stanley Druckenmiller see it differently. They don't see Warsh as a hawk who will crush growth. I could not think of a single other individual on the planet better equipped, said Druckenmiller. They see a pragmatist who knows that innovation needs capital. That is a massive green light for capex-heavy tech. To understand why this isn't a bubble, look at recent precedents. Look at 2022. That wasn't a bubble bursting due to lack of profits. It was a rate shock. Inflation spiked, the Fed hiked, and the discount rate crushed valuations.
Look at that, you got under? Yeah, look at that. Look at that. Look at that.
It was simple math. Higher rates equals lower value of future cash flows. That pain is already behind us. 2008? Totally different animal.
This is going to be one of the watershed days in financial markets history.
It was a manic Monday in the financial markets. The Dow tumbled more than 500 points after two pillars of the street tumbled over the weekend.
That was systemic failure, leverage, broken banks. The plumbing of the world exploded. Today, US banks are well capitalized, and big tech is sitting on mountains of cash, not bad loans. And finally, the dot-com bubble. This is the lazy comparison everyone makes. In 1999, companies were going public with zero revenue, just a dot-com in their name. Valuations detached from reality because there was no business model justifying valuations. Now let's look at today's numbers. Take the hard data. During the peak of the dot-com bubble, the market leaders traded at an average forward PE of 61 times earnings. Today, the Magnificent Seven, the companies actually building the AI infrastructure, trade at an average of just 24 times earnings. That is almost 3 times cheaper relative to their profits. Now, look closer. Cisco Systems was the Nvidia of the year 2000. It traded at 100 times earnings. If you look at price development, you could scream, we are in a bubble. But now, take a look at price versus EPS. you can clearly see Nvidia growth is much healthier, and price basically follows EPS growth. We are not in a mania where investors pay any price. We are paying for massive, tangible growth. For our final comparison of AI versus the dot-com era, consider their actual financial health. The Magnificent Seven aren't fragile startups building on borrowed time. They are sitting on absolute fortresses of cash. Their aggregate net debt to equity ratio is at -22%. That means they hold massively more cash than debt. And on top of these healthy balance sheets, they generate higher return on equity and significantly fatter profit margins than the dot-com leaders ever did. But here is the best proof that the market is rational. Punishment. Look at Oracle. The moment the market realized their cloud growth wasn't keeping up with the hype, the stock got hit. From its all-time high in September 2025, the stock has gone down by more than 50%. It didn't just blindly go up. Investors are saying, show me the revenue or get sold. That is a healthy market, not a bubble. But while the market ruthlessly filters the noise from the signal, don't mistake these healthy corrections for the end of the road. In fact, if we zoom out, we're barely in the first inning. Most companies haven't even figured out how to fully implement AI yet. They are testing, not deploying at scale. More than 60% of companies are still in a test or pilot phase. But having mountains of cash is one thing. How they are actually deploying it tells an even more fascinating story. Right now, big tech is trapped in what game theorists call the prisoner's dilemma. If Google decides to stop buying AI chips today to save money, and Microsoft keeps buying them, Google risks losing its search monopoly and becoming obsolete. The real productivity boom hasn't even hit the GDP numbers yet. If you think you missed the train, we haven't even left the station yet. The buy everything phase is over. It means the easy mode is off. We are entering a stock picker's market. You can't just buy an ETF and pray. You need to understand the value chain. Who builds the chips? Who owns the energy? Who builds the models? And who actually applies them? If you want to navigate this, I'm working on a deep dive called the AI Hedge. I will map out the entire AI value chain so you can see exactly where the capital is flowing next. Don't miss it. Subscribe and turn on notifications. See you in the next one.